Did you know that Warren Buffett had 50% of his portfolio in one stock as of the end of 2023, and he's selling that stock at a really rapid rate? Now, only about 41% of the portfolio is in that one stock. Now, what's even more surprising is what that company is. He is selling shares of Apple. This is a position that he built in the mid-2010s when Apple was a very cheap company, very underestimated by investors. And now things have really shifted for Apple. This is not a company that's trading at 11, 12, 13 times earnings like it was when Buffett was buying shares. It's a company trading for more like 30 times earnings, and growth has slowed dramatically. In fact, growth is negative depending on the quarter that you're looking at. So today I want to go through exactly what Buffett has been doing with this position, because this is one he hasn't touched for a very long time. And now the fact that he's selling shares, I think, is something that should really raise alarm bells for investors. I have actually been selling shares of Apple over the past year as well, largely on these valuation concerns. It's a very, very highly valued company, and the actual financial metrics that they're reporting don't justify that valuation. Yes, it's a great company. Yes, I have Apple products all over this desk that I'm recording this on, but that doesn't mean that it's worth paying any price for the stock. So I'm going to dig through all of this today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first get to how big this position has been for Buffett over the last couple of quarters. The first image I'm going to show is the percentage of Buffett's stock portfolio that is in some of the biggest stocks that he holds. You can see that nearly 50% of the public stocks that he owned for Berkshire Hathaway was in Apple. Second place was Bank of America, then American Express, Coca-Cola. Those are positions that he has held for decades. But how did this change in the first quarter? So just between the end of 2023 and the end of the first quarter of 2024, the Apple position went to just 41.3%. Now you may say, hey, that's not that big a deal. Yeah, he's selling a few shares, but it's not all that material. Selling a little bit of a position, especially after a stock like this, is done really well. But what's notable for Buffett is he doesn't sell stocks very often. He doesn't sell these big positions in particular. As I mentioned, American Express, Coca-Cola, there are other stocks that he's just simply held for decades and just said, hey, I'm not going to get rid of this. He said at the recent shareholder meeting that he's not going to sell shares of Apple, but he has been reducing that stake. So there's a little bit of saying one thing and doing another from Buffett, but let's look at the position and how it has changed over time. This is a look at the ownership of Apple stock under Berkshire Hathaway. The orange column is the number of shares. So really started acquiring this in early 2016, 9.8 million shares owned at that period of time. That jumped in 2020, and that was largely because of a stock split. So don't read too much into that specific jump. The number of shares has really not changed all that much since 2018. That was when most of the acquisitions were made. That was when 252 million shares were owned in Q2 2018. Even at that time, that was 24% of the portfolio. And so Apple has sat in the Berkshire portfolio for years, for 6 years now, until the most recent quarter. In Q1, Buffett sold 116 million shares of Apple stock. In other words, he sold about 1.3 million shares every single day of the quarter. Now compare that to the average volume over the last 30 days of about 64 million shares. That means that about 2% of every single stock sale, Apple stock sale, was Warren Buffett selling the stock. That's how big these sales were. If he was selling more aggressively, he would have moved the market in a huge way. And this is one of the reasons that he can't just go out and sell $135 billion worth of Apple stock. That's still what he owns. So he can't just go out and sell that over the next week. He's got to do this over time, even if he's unloading this position. But this is also why I think this is such a huge deal. Apple has been a huge bet for Buffett, and he typically doesn't sell stocks like this, especially stocks as sticky and as big a companies as Apple. So he must be seeing something that has fundamentally changed over the last 9 to 10 years. So what could that be? Well, let's look at a few charts that explain, I think, what Buffett is seeing with Apple's business. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Let's start with valuation, kind of work backwards to what the business is today. You can see that in early 2016, Apple stock had a price to earnings multiple under 10. This is when Buffett was buying really aggressively. Apple stock was trading for under 10 times earnings. The price to sales multiple was about 2.2, depending on when you're looking at it during the quarter. But that was when he was buying aggressively. I say this oftentimes in this channel. Asymmetric investing is not just about buying the right companies, it's buying them at the right price. Valuation matters, price matters. And Buffett is showing us this in real time with Apple. So price to earnings multiple, he was acquiring really aggressively 2016, 2017, maybe even up to a price to earnings multiple of 15. Where is that multiple today? Price to earnings multiple is almost 30, 29.96 is the latest recording that I have from FinChat. Price to sales multiple is 7.7. So a couple of things that are going on there. You're seeing that price to sales multiple go up faster than the price to earnings multiple. That's in large part because of margin expansion that Apple has done. They've grown really high margin products like their services business, the giant check that they get from Google each quarter. So their margins go up. Basically, they're just squeezing more out of the business than they did in the past. So multiple expansion explains some of what has changed between 2016 and 2024 for Apple stock. But what else has changed? Well, growth has changed. I'm going to show this in a couple of different ways, but the first one that I'm going to show is the growth rate for Apple's revenue overall. You can see that there's this huge dip in 2016, fiscal 2016, and there's volatility for Apple over time. It had a ton of growth during the pandemic in 2021, but this was a company that was growing the top line at a pretty consistent rate, over double digits. So if you're paying 10 times earnings for a company that's generating revenue growth of 10 to 15%, that's a phenomenal value. That's a great business to be owning, especially when there's margin expansion in the business. Here's another look at this. You can see that revenue has more than doubled since 2014, and free cash flow has also doubled over that period of time. So you have a growing business and you have multiple expansion. That's exactly the optionality that Buffett was buying in 2016. He was saying, hey, this is a much better business than the market is pricing it at, so I'm happy to buy a big position in Apple. Maybe they'll buy back shares, maybe they'll pay a dividend in the future, and that will ultimately drive the growth that we've seen in Apple's stock. And since early 2016, we've seen shares go from $24 per share to, as I'm recording, about $191 per share. So about an 8x return for Buffett over that period of time. But what else has happened with the business? And this is what I've been really critical of Apple over, because it seems like the core business just simply isn't what it used to be. You could see in that last chart that revenue is down, peaked in the September 2022 year at $394.3 billion worth of revenue. That's now down to $381 over the past year. Free cash flow also down over that period of time. So what's going to grow Apple? How is this business going to get bigger over time? Why is it worth paying 30 times earnings? And I just don't think it is. This chart stacks all of Apple's product revenue on top of each other. So the iPhone, the Mac, the iPad, and all the wearables and home and accessories products. That's the green column at the bottom. And what's really fascinating about this is that in every single case, the fiscal 2022 year was the peak. They have all been in decline since then. So people aren't buying as many iPhones, extending that refresh cycle. AirPods seem to have reached all the people that they were going to reach. Macs and iPads, sure, they're making them a little bit better each year, but it's not a real compelling growth product. So where has Apple actually grown? Apple's growth has been driven by services. This is that 30% fee that they take for all the transactions in the Apple ecosystem. So you buy something in an app, Apple is going to take 30% of that. It's the payment that they get from Google. It's services that they provide directly that you might be paying a monthly fee for, like cloud services. But this has really been Apple's growth. And I think of this as not really fundamental to Apple. It's just Apple trying to squeeze more and more out of the business. So if your hardware sales aren't growing, how are you going to continue to grow the business? Well, you're just going to try to squeeze pennies out of developers, out of consumers. And that's exactly what Apple's doing. So the fundamental business is not growing. Hardware sales are not increasing. New products aren't all that compelling. I mean, the Apple Vision Pro seems like it's not selling very well at all, and it isn't going to drive the company's growth in the future. So what Buffett is telling you today is that this is a very different company than it was in 2016 when he was acquiring shares, and it's a much more expensive stock. That seems to be exactly why he is selling shares, and he's selling a very significant amount of shares. Yes, he downplayed it at the recent shareholder meeting, but this is really big news. When Buffett sells any sort of position, you should take note. When he sells the biggest position that was nearly 50% of the portfolio at the end of 2023, That is something that should alert you as an investor. Like I said, I've also been selling shares, so I feel very similar to how Buffett did. But what do you think about Buffett's sale of Apple stock? What do you think about the future of Apple stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.